And Dwight, can you hear me?
Yeah, hello, Greg.
Hey, good, sweet. Dwight, thank you for joining us. So I'm sitting in Calgary. Andrew's sitting in Atlanta. Dwight is sitting at the junction of Manitoba and Ontario, right on the US border, in a place called Emo. And so I'm really excited. I'm always, Dwight and I can talk for hours like Andrew and I did yesterday. I think Andrew and I spent over 2.5 hours on Skype just chatting about charts. It was awesome. But Dwight and I share charts all day, and he obviously writes on my website for those that have been over there. And today, Dwight, what have you got for us?
Hey, Greg. I'm just going to give a little introduction on what I do for people who don't know me. I ran my scans last night for the Canadian side of the market, and I made a watch list just for people to keep an eye on that are setting up at the apex of a big base. Momentum's trying to appear, starting to appear, and it's coiled underneath a horizontal resistance line. So it's a watch list that we can watch and react, and just to keep an eye on. And it's just the results that are showing up this weekend. So,
Perfect.
okay, hello everyone. Thank you, Greg, for the awesome presentation, and thank you for joining us, Andrew. That was great. So before I start, I just want to kind of expand or just comment on a few things Andrew said, which I thought were great. So us as CMTs, we're trained to react, not predict. And the Elliott wave example that he brought up, I couldn't agree more. So you can get 5 Elliott wave technicians, and they'll all be looking at the same chart and all give you a different answer. So I know I commented in the chat that amen, because Elliott wave is subjective, not objective, and it creates biases. And what I often find or I see is a lot of people look at charts and they think they're doing technical work, but what they do is they have a bias on a company or sector on what they think will happen, and then they will use the chart to try to chart their bias instead of actually looking at what the chart's doing and reacting. So, and that's the one thing that I'll expand on my scans and my setups. It's stocks that are showing the potential momentum, and it doesn't mean buy. It means to watch the setup, watch price, and react. So, just thank you again, Andrew. I couldn't agree more. I think that's great. And I'll do my quick introduction here. I know a few people have seen it before, but I think I can't really make anything any different. So I'll do the quick presentation, and then we'll get into some new charts and some new ideas here. So let me start the slideshow. Oh, and that's another thing Andrew said. He's like, you don't know what you don't know until it happens. And I know when I first started in the market, it's easy to get cocky and arrogant and be like, yeah, I'm right. I know this is going to happen. But I'm to the point now where the market's been so humbling over the years. It's like I'm well aware that I don't know what I don't know. And sometimes I even feel nervous presenting because I'm aware of that. So it's a good thing, because the second people seem to get a little cocky, I can say, is the market has a way of putting us in our place. So, okay, so I'll start my slideshow from the beginning. My name is Dwight Galusha. I'm the founder of setyourstop.com. So right now, just due to opportunity costs and time, Set Your Stop's kind of been on hiatus. I do still have my chat room where I update all of my work, and I've moved my daily blog over to gregschnell.com, where I do a daily setups article for Greg each day on stocks that are usually set up within the apex of a pattern or pushing up against a horizontal resistance line or showing the potential momentum. So here I'm at setyourstop.com, and what I do over at gregschnell.com. Oh, sorry, here Greg, it says John has entered the waiting room for this meeting. Do I just click admit? I'm guessing.
Yes.
Okay. So at setyourstop.com and now at gregschnell.com. So I'm a systematic trader who searches for abnormal volatility, which signals the potential momentum coming into an underlying name or sector. So the definition of systematic trading, also known as mechanical trading, is a way of defining trade goals, risk controls, and rules that make trading decisions in a methodical way. So here's just a chart I pulled off the internet, and it's more or less what my setups show. Horizontal resistance line showing a technical signal that's showing potential momentum. Once the signal is taken, there's multiple ways to define your risk, whether it be an initial ATR stop, using a moving average to trail, a trailing ATR stop, a volatility stop. There's ways, but that chart couldn't be more clear. So the charts I post on setyourstock.com, on gregschnell.com, and in this presentation are to be used as indicators only, not a trigger to buy or sell. Okay, so as Greg mentioned, I'm from a small town called Emo, Ontario. Like right now I can look out my window and I look across the river and I can see Minnesota. So I'm in the lower left-hand corner of Ontario, located roughly 3.5 hours from Winnipeg if I cut through the US, and 5.5 hours from Thunder Bay. So since we're talking about the stock market, I'm located about 15, 20 minutes from the new gold flagship Rainy River project. So right now I have a partnership with 5i Research. So 5i Research is a website where people can go and ask questions. For those of you who don't know, the founder is Peter Hodson, and the CEO, Chief Executive Officer is Ryan Modesto. So Peter Hodson's known for being chairman at Sprott Asset Management, and at one time he had over $1 billion under management. So it's a great company, and I do blog work for them. So you can go to the website, 5i, or even setyourstop.com, and you can see my past blog articles. I also have a partnership with Capital Ideas Research. So Capital Ideas Research, I submit a daily trading idea, and it's great for small cap investors. They also often post new ideas to put on your radar. And the founder is Fabrice Taylor, and Mark Bunting, the former host of BNN and Bloomberg, was recently the raider of the newsletter, but he's left. So we have another person taking over, but the daily digest or the weekly digest still comes out. And this is just an example of one of the charts I submitted to Capital Ideas Research. And then here's just a quick look at setyourstop.com. So these are the blogs I used to do on the daily. Now I've moved it over to, as I said, gregschnell.com, where I do show my ideas. I take out less of the clutter noise and just focus on the stocks now over at Greg's. So here's some examples and ideas of the breakouts, momentum plays, bottoming plays that I'll look for. So here's an example of breakouts to watch. So here's that TMX group. So I'll use examples that are documented. And this was an example that I posted in actually 5i Research. So here's the chart. You can see it's setting up underneath a new, so it's right here. It looks like, because that looks like a monthly chart, hey? And it's so be set up at the apex of a multi-month continuation triangle, which is coiling under a new all-time high. And that's almost a definition you can see if you were to put the Bollinger Bands on that chart. The Bollinger Bands are within a volatility contraction. Periods of low volatility are often followed by high volatility, which will make these moves very explosive. Once the sign of momentum starts to appear, as you can see on this chart, price started pushing above the volume by price bar on the left as volume started to increase, which showed signs of momentum. And so for those of you who don't know, because I forget almost what I know, and I know what I don't know. I don't know what I don't know, if I'm making sense here. But the volume by price bar on the left, so it shows areas where the most volume has traded, or it shows how volumes are traded. So lots of times it'll form resistance lines. It'll also show areas of accumulation and distribution. So once price can break out above a big volume by price bar, you know that within this pattern, that tight trading range, within a volatility squeeze, you can see that volume by price bar where shares were accumulated. And then once price breaks out, it's a new all-time high. There's no overhead resistance. The people have been accumulating. There's in theory no losers in the stock, so there's no overhead resistance, and the stock can take off. So here's what I wrote. So after breaking out to an all-time high at the beginning of May, TMX Group has spent the last 2 months consolidating within a pennant continuation flagging pattern. Last week, price action started to push higher from this pattern and actually printed another new all-time high. This is an example of stocks that make a new all-time high often continue to make more highs due to no overhead resistance. The SCTR ranking has surged to a reading of 9.68, suggesting a continuation in outperformance, while the RSI indicator shows an acceleration in upside price momentum. One must remember that the RSI indicator can become and remain overbought for long periods of time during a strong price move. And I know Andrew talked about that, where he said, I'll never say that a stock is overbought. And I often get questions like that, where I'll get a stock giving me my textbook technical buy signal, and they'll say, but the RSI is overbought. And my reply to them is, you are distracted. Okay. And here's the results. So the follow-up chart, as price broke out, this is the power of a volatility expansion. You can see price broke out at 92 in a short period of time. We were touching a high of 120.48. So these are the types of setups I live for. And it was kind of cool that Andrew mentioned John Bollinger as well, because when I first started, I'll talk about it later in the presentation, but the volatility squeeze was created by John Bollinger. So that was great. So here's another example of a momentum play. So here's a CGI group. You can see prices setting up at the apex of another tight consolidation area and also starting to push above a volume by price bar, and price is just starting to poke its head above, looks like a multi-month downtrend line. So here's the chart, documented chart I posted in Capital Ideas Research. CGI group has been in consolidation for nearly 7 months within a continuation type pattern. Price action has now completed a technical pattern as it breaks out above a major horizontal resistance line to a new all-time high. The probability of continued upside momentum is extremely high, with the PPO momentum indicator turning up, while the zero line indicates positive momentum. Oops, well, what am I doing here? Bumped the wrong button. Okay, so the surging accumulation distribution line is also helping to determine the path of least resistance. This type of breakout can be very powerful because the momentum dynamics often accelerate higher when a security reaches a new all-time high. And that's the same thing that I talked about with TMX Group, a breakout to new all-time highs. There's no winners, no overhead resistance. The stock can move, and especially when it's breaking out from a basing pattern or an area of consolidation. And then so here's the results. You get a breakout to a new all-time high, and price just continues to run. So here's a bottom fishing pattern that I use. So this is I don't know if I'll say this right, but alimentation couche-tard, right? So this might not be in theory textbook definition of inverse head and shoulders bottoming pattern, but oftentimes you'll find, especially with the algorithms in the market now, that stock patterns are not exactly as defined by the textbook, nor can you draw them perfectly symmetrical. And by looking at these patterns, what we're looking for is areas of accumulation and distribution. We're looking for supply and demand. We're looking for areas where a pattern has shown that it's ready to break out after consolidating and showing that the bears are taking control and the accumulation has happened. So alimentation couche-tard is near the completion of an inverse head and shoulders bottoming pattern. On the morning of July 10th, price action completed a breakout gap on heavy volume, which was created by a better than expected earnings report. A breakaway gap is an important event because it often marks the low of a new trend. In this case, it led to the construction and completion of the right shoulder. Now price action is pushing up against the underside of the neckline resistance as momentum, the PPO momentum indicator, begins to accelerate higher. This price action is very bullish as a breakout above the neckline would complete the inverse head and shoulders pattern and suggest the beginning of a new uptrend. And then here's the results again. After the gap higher, I guess, like I know Trader Stewie, if you follow him on Twitter, he calls that a power earnings gap. So price did gap higher, it pulled back, retest the breakout, and then once momentum kicked in, it was off to the races. So again, these are the type of momentum plays that you want to look for out of a type of continuation pattern. So even though this was a bottom fishing candidate, it's still, you can have an inverse head and shoulders continuation pattern within an uptrend. And when you look at this chart over this time period, you could also consider that a continuation pattern, bottoming pattern, whatever you want to call it. We're just looking for breakouts to highs and want to trail momentum. So here's the scans I run. So I've got a series of scan code I've created and combined that search for momentum. I have given out my code before, but even as Andrew talked about, he has people who've kind of stolen his work and tried to pretend he was him. So just over my time in the market and with my chat room, I've had people follow me, learn from me, and I've given them too much information because I was excited to teach. And at the time, I was exciting of my findings because as I built out these systems and I built out these code and these scans, and as they started to work, I was like, wow, I'm actually doing this and I'm excited and I want to share. And then what I found was I've had a couple of people who've actually taken my work and started their own services and just regurgitated what I taught them, and tried to sell what I created, I guess you could say. So I'll give out these two simple scan codes, but I think the rest of it I gotta keep private for now on. So, anyways, this is just a basic scans I run, and if you keep things simple, less noise the better. So right now, one of the scans I like to look for is the 55-day high, and then also the volatility scan. And as I go on, you can see the power of the two and even the power of the two when they're combined. So the 55-day high scan, the idea is that trend is your friend. So I look for stocks breaking out to a new 55-day high, 55-day high, which is roughly 3 trading months, because we don't count the weekends. So from a tight range while providing a low risk entry, the 55-day high comes from legendary commodities trader Richard Dennis and William Eckhart. In 1983, they held the turtle experiment to prove that anyone could be taught to trade their mechanical trend following system based on price momentum signals. Dennis would find a group of people to teach his rules to and then have them trade with real money. Dennis believed so strongly in his idea that he would actually give the traders his own money to trade. Turtles were taught very specific rules on how to implement his trend following system. One rule was buy when the price exceeds the high of the preceding 55 days. All breakouts from a system would be taking whether the previous breakout had been a winner or not. So if anyone's interested and want to learn more about this book changed my life. It's a simple, fun read, but I highly recommend The Complete Turtle Trader by Michael Covell. The book covers the turtle experiment and all their trading systems in depth, and I've kind of built off what the turtles do, what John Bollinger Band does, created my own scans, and do what I'm doing here today. So there's the cover of the book if anyone is interested. So then the volatility scan. So volatility squeeze is triggered when the Bollinger Bands reach a 6-month low. So there's lots of times I'll see a setup and the Bollinger Bands might not be at a 6-month low, but it's still within a tight area of low volatility. So John Bollinger, the creator of the Bollinger Band, puts it, Bollinger Bands are driven by volatility, and the squeeze is a pure reflection of that volatility. Periods of low volatility are often followed by periods of high volatility, which is what makes the volatility squeeze very explosive. And like I've demonstrated in the previous examples that I put on setyourstop.com or 5i Research. So Bollinger Bands default settings are as follows. The upper and lower band are set at 2 standard deviations above and below the 20-day simple moving average. As volatility contracts, the Bollinger Band squeeze towards the 20-day simple moving average, and as volatility increases, the Bollinger Bands expand away from the 20-day simple moving average. The breakout signal occurs when the stock price rises at a rate where the Bollinger Bands begin to expand. When combined with the 55-day high breakout, stocks moving higher from a volatility squeeze can be very explosive. So here's another documented example. So a lot of these are old. I was going to update them, but there's, for demonstration purposes, they work. And then there's an example I can show that recently happened that's great here. So anyways, an example is a 55-day high scan. So I tweeted, it looks like on August 23rd, 2017. Continue to like the way CS.to keeps pushing up against 3-month highs. Watch for a breakout. Momentum indicators have room to run. So this setup, I don't have it drawn on the chart, but you can see price is set up at the apex of an ascending triangle continuation pattern while coiling below a 55-day high and pushing up against the underside of major volume by price bars. So I guess here's the chart where I drew it better. Volume by price bar. The 55-day high signal came on August 23rd as price action was coiled near the apex of an ascending triangle and under a major volume by price resistance, while the price of copper was breaking out to a 3-year high. So that's another thing you like to look for. You just want to increase the probability of the trade. So as copper was breaking out to 3-year highs, this was a mining company in Canada, a copper miner set up at the apex of a triangle pushing up against the 55-day highs, increases the probability that the setup is going to work. And then here's an example. After the 55-day high signal was triggered, price action went on to surge approximately 26% in 8 trading days before momentum started to wane. And also you can see at the bottom, I have the accumulation distribution indicator on the line. So I like to see when that thing starts to take off. Because I think volume is very important. So here's a 55-day high scan. So here's just an example. Like I said earlier on, there's well, I don't want to say a million, but there's many ways to define your risk and try to ride these momentum trades. So for me personally, I like to use the 2 hour time frame, but it doesn't mean I trade off of 2 hour bars. What it means is I can zoom in on the pattern I'm looking at, and I can find ways to monitor price action and trail that price action. So, and another thing, Andrew, it's kind of cool that he said that he likes to put moving averages over the RSI, and I use the 20 period moving average, and lots of times I find for a swing trade is when the 20 period moving average gets above 70 on the RSI after it becomes overbought and then price falls below. That's usually a short term signal where the stock will either pull back or consolidate. And I usually combine that with the ADX indicator. So if the ADX indicator ramps above 45, the RSI gets overbought and the 20 period moving average over the RSI gets above 70, and then the RSI crashes below, like shown on this chart. More times than not, it's time that the stock needs to cool off, or it's the end of the move. And if you're a swing trader, that's great. There's times that if you're a long-term trend follower, like the examples I've given earlier, you'll just get whipsawed out. And then there's lots of times where you won't be at your computer when the next buy signal comes, and then the stock will take off without you. So I have this conversation with Greg multiple times. It's like, do you want to swing trade, or do you want to trend follow, or should you do both? And the biggest thing is just knowing what time frame you're trading on, because I know I've heard a line before. It's like, if you're a trend follower, don't try to swing trade. If you're a swing trader, don't try to scalp. If you're a scalper, don't try to trend follow. It's just you'll just get all out of sync and you'll mess yourself up. But anyways, this is an example of the 2 hour chart allows you to take a price. So what I have, a 1334 EMA. On this chart, depending on your strategy, the 13 EMA held this whole momentum move. Once price broke below the 13 EMA, the RSI also fell and gave a sell signal. And so it's a nice little move. It's a big move in a short period of time. Again, showing the power of the volatility squeeze and the 55-day high breakout. So here's a volatility scan. Here's a setup I put in Capital Ideas Research. Ballard Power Systems has broken out from a continuation wedge and above volume price resistance on higher than normal volume. Relative strength versus the S&P 500 has broken its downtrend line. Momentum, the MACD has begun to accelerate higher, and the SCTR ranking continues to trend in the top performing quartile of the TSX listed stocks. Price action is very bullish and suggests a continuation of the previous trend is now underway. So here's the setup. Signal was triggered on August 31st when price action pushed above the upper Bollinger Band and above a major volume by price resistance area. So again, you can see within that pattern, it's a falling wedge continuation pattern. Price was setting up near the apex, which increases the probability. You can see the volume by price bar suggests a high level of accumulation within that pattern. And then as price started to break above the Bollinger Bands, it gave a signal. And then the final signal came on a move above the horizontal resistance line. And you can also see at the bottom, accumulation made a powerful thrust off the low as there was a spike in volume as price started to expand from the volatility squeeze, which can also be called volatility expansion. And again, here's another example of the power of the volatility squeeze. After the volatility signal was triggered, price action went on to surge approximately 56% in 9 trading days. So signals triggered on August 31st when price action pushed above the upper Bollinger Band and above a major volume price resistance bar. And then you can see the accumulation distribution line at the bottom as volume picks up and it takes off. But again, that's 9 trading days, 56% move. It doesn't always happen like that. But again, showing the power of the signal. And then right here, so I've got the 2 hour chart again. And I got some notes on here. So instead of babbling on, I'll just read them off. The 2 hour chart allows for a closer look at price action and helps you manage the trade. So price ramped above, the volume by price bar now becomes defined risk. So it helps you identify risk where you can have a trailing stop. What was resistance now becomes support. You can see there's that area of accumulation where most of the stock has traded hands. So either it'll hold that pattern and continue to trend, or if it breaks below that level, then you have a bunch of losers in the trade, which is called the I just want my money back crowd. And chances are as price ramps into the underside of that, it'll just be people trying to sell to recoup their losses. So that's a key level to watch. Price action has held above the 13-day exponential moving average for the entire move of the trend. Depending on depending on one's trading personality, an exponential moving average between 13 and 34 works great as a trailing stop. So again, I got the signal in the breakout August 23rd. So at the bottom, volume by price bars are a great tool for defining low risk entries, identifying risk reward, and a place to set your stop loss order. Here's an example of a breakout, retest of the breakout, then price action was off to the races. Oh, sorry, every time I admit someone into the room, gotta go back. Okay, so here's a quick example of a volatility when you can combine the power of the volatility squeeze with a 55-day high breakout, just another way to increase your probability of the trade and makes the trade more explosive. So here's, it's funny how times trade, because I think, didn't Calfrac well just get taken out for like 25 cents or something? Yeah, times have changed. So anyways, here, this signal was given on August 31st, 2017. That's a tweet I posted. And lots of times when I tweet, I don't, maybe I get annoyed easy, but I don't put much on Twitter. I'll just post a chart. It's either you see what I'm posting or you don't. I'm not going to go on there and say, I think this will happen, or look at me, look at this. I'll just post a chart, maybe with a winky face. If you get it, you get it. You don't, you don't. So anyways, there's the tweet. I posted just to say, hey, if you're paying attention, watch this setup. And then so that was August 31st. On September 5th, this stock was featured in Capital Ideas Research. CalFAC World Services has broken out from an inverse head and shoulders bottoming pattern. This pattern relies heavily on volume for confirmation, with all indicators pointing higher and with price action trading above the 200-day moving average. This price to action suggests the beginning of a new uptrend is underway. So here's zoomed in. The signal came on August 31st as price action broke out from a tight volatility squeeze, a 55-day closing high, and over the 200-day moving average after being coiled under a major volume by price resistance line. Again, here's a big volume by price bar, and you can see the volume by price bar, which once was resistance, now becomes support. Price starts breaking out from a tight volatility squeeze from what one could consider an inverse head and shoulders bottoming pattern, and on an increase in volume. So like that's huge. So we got the accumulation line broke above the downtrend line, and you can see that there's an increase in volume. So you can see on the head, you had a surge in volume, more or less. Sorry, I'm having a brain fart here. Can't find the right word, but volume decreased or declined. And then as price started to expand, you can see an expansion in volume. And then again, as price consolidated and went into the area of consolidation and the tight volatility squeeze, is like the calm before the storm. Volume more or less went to nothing. And then the spike in volume gave another signal that the expansion was about to happen. And then here we go. So again, after the signal is triggered, price action went on to surge 22% in 9 trading days. And this chart, it doesn't always happen this way, and people do get stopped out lots. I get stopped out a lot, and I don't get back in. But this is just demonstrating the power of the move again. So here's the 2-hour chart, which I love to use. So price action continues to trend above, this time the 34 EMA, which often presents whipsaw. Lots of times, if you use the faster EMA, you take the risk of being stopped out, and then the stock takes off without you. Also, another thing is there's lots of times I just like to use the Bollinger Bands and Keltner channels, and lots of times on these momentum moves, price just won't break below the middle band on the Keltner channel, and especially on these big momentum moves that I want to get and want to run, it's that middle period, which would be either the 20 simple on the Bollinger Bands or the 20 EMA. I like to use a 2-hour chart and just use that middle band, and as long as price holds that, the trend usually stays in place, removes all noise and all thinking. So again, the volume by price bars are a great tool for defining low risk entry. And also this, so if you zoomed in on the 2-hour chart, this also helps you identify the breakout. So you can see as you zoom in on the pattern, it's a lot cleaner than looking at that sloppy daily chart, because that daily chart was really messy. So on here, you can use the volume by price bars, draw a horizontal resistance line with an arrow. It's a great tool for defining low risk entries. Identifying low risk entry, or identifying risk reward in a place to set your stop loss order. Resistance now becomes support. Once price broke above that horizontal resistance line, the daily chart signaled a volatility squeeze to a new 55-day high, and then price just started to run or trend with the moving averages. Okay, so that's it for the introduction. Sorry, it's a little long-winded there. So those are old examples, and I haven't been keeping my website up to date. But here's some newer examples that I've updated. So like wheat and precious metals was a beautiful signal, and this is actually a lesson that I did. So we were in the chat room. Price gave a signal. It took off. I was on the road. I was zooming in, and I forget what happened. This is a monthly chart, but price ramped really high, and I got a pretty big percentage move in a short period of time. So I took my profit, and I felt like I was awesome. It's like, yeah, that was a good move. And then price came back to retest the breakout, and then it took off. And there was Dwight on the sidelines watching the stock go without him. So that's the thing. Know your timeline, and the thing is, when you take these short-term profits, lots of times, even my 2-hour system will say it's short-term overbought, and I'll take profits, and then I'll miss the next signal, and then the stock will take off to the moon. And it's like Andrew also said, is like he can make more money just taking positions in a stock and going golfing. And lots of times when you sit there and watch the intraday price action, you will sell prematurely or get whipsawed. So here's a stock. This is a setup actually I featured, and then that was before COVID hit, and then there was a whipsaw. So I know there's a story. What was it? Paul Tudor Jones. I can't remember if it was Microsoft, but there was a story I read years ago where he was stopped out of Microsoft 4 or 5 times, but he kept watching the trade, and then finally when the trade took off, he was able to get in and ride it more or less to the moon. So let that be example. Just because you get stopped out, and I'm guilty of it as well, but don't say, okay, I'm stopped out. I can't look at it anymore. I lost money on this trade. I'm bitter at the stock. I'm angry at the stock. I'm not going to buy it back. Just remove all biases. If the setup's there, there will be whipsaw. And lots of times, the most whipsaw happens before the big move takes place. And lots of times, I find on falling wedge patterns, you'll have a falling wedge, and more times than not, I'll see a little inverse head and shoulders type pattern at the apex where volatility will increase, and it seems like they do the best to shake out the scared or the impatient, and the next thing you know, the stock's gone to the moon without you. So here's a stock I featured the following setup on February 18th in Capital Ideas Research. Before the COVID-19 created a forced liquidation across the market. So instead of reading through all this is just a huge basing pattern. So this was a wheat and precious metals was setting up within a 10-year base round a bottom pattern. So and do I have this on here? Well, no, there's an old technical saying: the bigger the base, the higher the. And also, if you're to zoom in on the daily, price was breaking out from a continuation triangle to no all-time high while the precious metal market was running. So this is just another wave of signal. So here's the move. Price went from, what does it look like? I guess I got it right up here. So price went from the signals on April 9th, 2020 at 44.71. And then in 3 months, you got a 62% move. Amazon was another one. So this is one where I know people love looking at the indexes, and it's good to know what's going on. But lots of times, the indexes, you'll be scared, you'll be too busy, worried about what they are doing, and you'll miss out on sectors that are working or about to work. And lots of times, the next sectors that begin to run, they'll start giving signals and start working before the market bottoms. And by the time the market bottoms and starts moving higher, these new sectors will be going bonkers already. And like the stay-at-home healthcare names are one. All the stay-at-home names, like this was Amazon. So this was on March 30th, 2020. And this week, the market was going, it was scary. I had no idea. I was like, what can I use in Capital Ideas Research? And actually, Greg put this setup on my radar. So on March 30th, 2020, price action gave a signal at $1,968. So after the signal is yielded, it went 62% in 3 months. So you can see on the chart, after building a giant base, a 19-month base, near all-time highs in the form of an ascending triangle, after faking out many investors with a false breakout, the price action is now approaching the apex of a triangle. Watch for any move above the upper trend line highlighted on the chart, as it would suggest a breakout to a new all-time high and a continuation of the prevailing uptrend. And then, so here's the follow through on the chart. We all know what happened since. Here's another one, tight area. So right here being all-time high, 55-day high, out of a volatility squeeze. You can see the results of this trade. Capital Power like a slug, but I remember this was the summer when there wasn't a whole bunch working. So again, price breaking out from a multi-month continuation pattern, pushing above a major horizontal resistance line. Once the signal takes off, the stock decides to trend. And then Franco, Nevada here, this is a huge, again, another huge continuation triangle. So a huge area of consolidation, continuation pattern, a large base, bigger the base, the higher the space. Once price breaks out, off to the moon. And right here, this big candle, again, that's where COVID gave a little bit of whipsaw. So anyways, just some examples of the setup that works and some new ideas. And there's also, oh, there's so much of stuff popping up here. So here's on gregschnell.com. So here's one of the most recent examples. So this is an article, or this is one of the daily blogs I did from Thursday, July 9th, 2020. And this will be well health. So this is kind of cool. This is an idea of what my daily setups look like over at Greg's website. So Greg's created a pretty good indicator, and it's been right on. It's been awesome, and it's pretty cool because he created it. So it's awesome. So every Thursday he usually posts it. So this will be on the 9th, and here's the daily setup. So Greg posts his indicator, talks about what's going on in the market, and so here's some of the setups I posted that day that were appearing on my scan. And one member suggested that we put a link to the chart, which is pretty cool because you can go back, look at any chart, click on the link, it'll take you to that chart, and you can see where you would have got stopped out or where the stock worked. So right here, this is a setup where it wasn't making 55-day highs yet, but this stock was kept consolidating in tight areas, entering a volatility squeeze, and then it started to break out. So well health surge day on increased volume, watch for a breakout above the volume price resistance line, as it would suggest further upside momentum to follow. So right here, we'll click on the link to the chart. It'll take us to stockcharts.com, and you can see the chart. So even right now, you can see how this came out of a tight area volatility. It came up, made another made a horizontal resistance line, which started to form a continuation triangle. You can almost have like a little tiny cup and handle. Within this second handle, it went into another volatility squeeze. Then when price started to break out above the Bollinger Bands and made a 55-day high, this stock was off to the races. And then, so one example, for those of you who aren't familiar with drawing patterns and charting, right here, you'd move the horizontal resistance line more or less up to, we'd say right here, which would be past highs. Put the arrow, I guess I'll move the arrow. You can take your trend lines, draw a continuation pattern. Right there, continuation triangle, set up in a tight area, a contraction, say volatility squeeze, breakout to a 55-day high, and there's the results. The thing is, we don't know what the stock's going to do. All one can do is trail and let it work. And then also, I'm a big fan of William O'Neill. And I know lots of times they'll talk about cups and handles. And when they say it formed a cup and a little handle, it's not the textbook definition of the cup has to measure this amount in order for it to be valid. It's just watching areas of accumulation, distribution, supply and demand. So right here, around at bottom, accumulation area, consolidation, continuation within a triangle. And then as price reached the apex, you could call it a little handle. So you got an area around the bottom, price broke up, came back to retest the breakout in the form of a handle. Price gave the 55-day high signal of volatility squeeze, and we were gone. Okay, so there's that. And I guess going on from now, so I can talk about, there's Greg's site we do, and also I've presented a few times now, and I've never shown the chat room, and I don't really promote it. So the chat room we have right here, we have a good group of people. It's become more like a coffee shop or a locker room. It's not for buy and sell signals, but we have a lot of smart people, a few that work in industry, and we just sit there and talk like we're sitting at the coffee shop. We share ideas, we share charts, we joke around, and I don't promote it anymore because I could care less if it grows or not. It was an idea I had, and I'm kind of scared if it gets too big, it'll ruin the dynamics we have. But here's a cool example of something. So right here, this was just posted this morning, and it makes sense because in Canada, all the stay-at-home health stocks are working. Well, health is new highs. Doc.V is taking off. I know one that we've all been watching is a Protec Home Medicals lumped into that. It's been breaking out, and also VIH with VidHub. It's related to the vitamins and the wellness and the stay-at-home. it gave a signal and it had a huge ramp this week. So this is a pretty cool chart that was posted in the chat room. Being a chart guy and looking at the COVID chart for daily cases, it looks ready to break out. So you can look at this chart and it's pretty cool how I know Teladoc hasn't been correlated, but all these Canadian stay-at-home health names has been correlated to this chart. And it's kind of cool because we started getting our momentum alert signals and we started putting all these names back on our radar before even knowing that this was happening. So here's another reply. I was thinking the same thing, breakout to another all-time high. And then this is kind of funny. I put the whatever face, like, ugh, kind of course he would, but Trump is even pumping this chart as hard as he can. So right here's VIH. I posted this morning. It kind of makes me upset because if I could draw a wedge right here, volume started to appear when price was breaking out above this continuation pattern. It's like a bull-like continuation pattern, continuation wedge. But this is one of those stay-at-home plays, and it's moving like the rest in the sector. So just a quick thing. Got a report channel. Post reports. I have a friend who works at a financial institution. He shares all of the reports he gets with me, which is pretty cool. Penny channel for the people like the pennies. We have some great mining names in the chat room. So for the mining people, each day I run my scans and I post all my scan results. We have a US channel, and right here Greg's blog videos. So here's a bunch of Greg's educational videos. So just if anyone wants to check it out, we'd love to have you. Just I don't really talk about it much, and I know some of the new members, they're like, why don't you promote this? And another reason I don't promote is I just don't like the headache of dealing with people, and it isn't a place to come for buy and sells. So it's hard to get that across to some. And so we'll take a look here. So at Greg's site, so for this week's edition of Daily Setups, because I was presenting today, I thought here, so I said today I thought I'd do something different by sharing a glimpse into my daily work, since I'm presenting at the 2020 CSTA annual conference tomorrow. And again, if interested in viewing, I gave a link. I'll be focused on my Canadian side of my work. The main focus is to trace abnormal volatility in the Canadian equity market. Today I'll be sharing my results. Also at the bottom of this report, I'll be sharing a pure volume scan for the American subscribers, just so I don't leave anybody out. So right here, if anyone wants to take a look at my scan results, I posted the summary. And one thing that's cool is I can compile it into a PDF folder, and you can come on here. So right now you can scroll through the list, and if you're looking at Algonquin Power, for example, you can just click on the link and it takes you right to the chart. So that's pretty cool, I think, a feature. So there's the list, and then I went through and I picked out all the scan results that are showing up, as I mentioned earlier, coiled, or they're setting up under a big base near an apex. So here's setups I pulled from the scan results. And so these charts have been building a base and are now setting up near an apex of a consolidation / continuation pattern while coiling below a major horizontal resistance line. And I'm just going over all my examples, the volume by price resistance line. You can get all your signs of momentum, but until price breaks out above that line, it's almost a binary event. Above the horizontal resistance line, I like the name. Below it, the stock didn't do what I thought. I also live by expect the expected. So if the expected doesn't happen on a stock that has a high probability of a certain outcome, I just cut my losses and move on to a stock that is working. So the goal is to put these charts on a watch list and monitor for upside breakout. So you can click on each candle glance chart to view the full size chart. Each chart has been annotated to show a technical pattern. So I'll scroll through here quick. Some of the charts I know we're looking at, like this is one Greg really likes, and he's put it on our radar. So you can see I clicked on candle glance chart. It takes you right to my annotated version. And this is one that a few of the guys have been watching in the chat room, and Greg has been talking about a lot, this natural gas theme. And I actually posted a report / article in the chat room that I got from my buddy over at AltaCorp. And it's kind of cool because like that COVID chart breaking out to new all-time highs in the chat room, and thanks to Greg and one of our members, Boltrand, he's an energy guy as well. We've been watching TOU, ARX, and Birchcliff, and in that report, all three of those stocks were highlighted. And it's just kind of cool how technicals and the momentum scans put these stocks on our radar before the masses get the reports of what's actually taking place. So here's ARC. Kind of the example I've been giving, looks like a volatility contraction, increase in volume, prices breaking out from a continuation pattern and above a horizontal resistance line, which is great. Birchcliff as well. This is one, it's kind of already breaking out, but that's almost exactly the same as the capstone example I given earlier in the presentation. Here's one that's interesting, like the airline industry's death right now, but here's an example where price keeps pushing up against the underside of a horizontal resistance line. Momentum is starting to go positive. So if you read a technical textbook, it's actually considered a buy signal when price breaks from below the zero line above the zero line. So to increase probability, right now price is pushing up against that horizontal resistance line in a tight pattern, and it's almost retesting the breakout of that wedge. So that's one where if momentum comes in, I wouldn't be surprised if it gives a powerful upside move. This is a cool chart. So this is one actually, I guess it was more luck, but Elon Musk came out and he said he's going to reward any nickel company that can produce nickel for their batteries. And I was driving that morning and I seen it on CNBC, so I did a quick scan of the Canadian companies, and this actually showed up right back here around 120-ish. And we were able to set the alert. And I know a few of us got in and it ran right up to $3. I myself sold way before $3, but it's still fun. So this is one that's showing up again, and is consolidating round a bottom pattern. Price is pushing up against the underside of a major horizontal resistance line. You can see the volume by price bars on the left, huge area of accumulation. So price breaks above that. This is just signal or suggest a continuation of the uptrend, and it also fits the electric car theme. Let me scroll. So many, I could go through all these, but I see I'm running out of time. And it's so these home like in right now, a sector I like in the US right now, I'm focusing on Canadian names, but the housing sector in the US looks great, and I'm starting to see these housing related names in Canada are setting up. Like I know Equitable, they're kind of into mortgages. I don't know what's going to happen, but right here, prices again at the apex of a continuation type pattern, rounded bottom, trying to push above a horizontal resistance line. So that's one to keep an eye on. Watch for a breakout. Home Capital Group, very similar pattern. Looks like something's here. Do I know what's going to happen? I don't know. I'm just looking at the charts. And then here, so like I suck at gold. When I look at gold and try to guess what's going on, I have no idea. But some of these gold companies are setting up. So right here, I know KNT is one of the darlings in Canada. And actually, during the last run, this was one of the charts that we featured on GregChanel.com and in the chat room, and we got this breakout down here. Again, this is an example of a triangle, volatility squeeze, expansion, 55-day high breakout in the stock trends. So right now, price again is at the apex of a type of a pattern. It's a binary event. Above the horizontal resistance line would suggest a continuation of the uptrend. Below the horizontal resistance line would signal or suggest that gold's about to roll over. So it's kind of interesting listening and watching in the chat room and people's opinion on the US dollar. So if the US dollar is going to roll over, chances are this setup will break up to the outside. If the US dollar becomes strong, there might be a probability that this stock and the gold charts Greg was showing will have trouble to get going. So right here, this is one. So the the car sector is booming right now. All the car stocks in the States, Magnet's taken off, Linenars, I would say LNR's taken off. So here's another one, Martin Rea. So it's to do with the automotives. Here's a setup that I'm really interested in, and I'm wondering if it'll play catch up with the other two big automakers in Canada or auto-related stocks. So right now, price has broken down above a major downtrend line, and now it's retesting the breakout of that trend line in the form of a bull flag continuation pattern. And it's also coiling below a major horizontal resistance line. So one could take a measured move if price breaks out above the horizontal resistance line, take the difference from 983 to 1093, place it at the breakout, and that would almost take you back to the old high here of 1445, and would give a suggested measured move back to the highs and clean selling. And you also have the automotive sector theme supporting this chart. So this is one I like. Let's see, here's another gold company. So this keeps showing up on my scanner, continuation pattern, pushing up under near all-time highs. And you can see this little cluster of buy volume. So I don't know what'll happen, but that's one to react. I know this is one I think Bull Trend's been watching in the chat room. He was able to get this first surge in move. So price action again right here. One could call this like a bullish pennant, bull flag, continuation pattern, huge volume by price bar, which suggests accumulation. Price is now pushing up against the underside major horizontal resistance line at the apex and above the upper trend line of the continuation pattern, while the PPO momentum indicator attempts to break above the zero line. So that could be about to give a technical signal. Park Lawn. I know it's not funny, but I guess not funny. What word can I use? It's interesting that one of the only funeral home stocks is starting to break out from a tight area of consolidation while prices of COVID increase. So it might not be a fun theme and it's boring, but I'm pretty sure this is the only funeral home stock, and it's It has been one of the market darlings in Canada. So this is a tight squeeze trying to push above a major horizontal resistance line from around a bottom consolidation pattern while the PPO momentum indicator bounces off of zero. So that's one to keep an eye on. OSB. So if the housing sector continues to work in the United States, OSB kind of has monopoly on Norboard. I know there's Louisiana Pacific and there's a couple other, but right here, so you can see on the chart, after breaking out to a 52-week high, prices come back to retest the breakout in the form of a falling wedge continuation pattern. Price is now making a higher low as the PPO momentum indicator tries to curl higher above zero. A breakout above the horizontal resistance line would take price back above the 44.10 high back in February and complete the continuation pattern or the fallen wedge and suggest a continuation of the uptrend off the March lows, and would also suggest a breakout to new 52-week highs, which would also have wind at its back if the US housing sector continues to work. So this is one I like that is showing up on the scanner. So this is cool. I just want to go through the anatomy of the trade because this is biases. And so this is a company I have a bias on, and it's due to fundamentals. So the goal is to find good companies with fundamentals that should work, that are undervalued, so you can define your risk in other ways. But when looking at this chart, we got a signal out of a tight volatility squeeze and a ramp. So the volatility squeeze, there's three parts. First, you get the squeeze, the breakout, the retest of the breakout, and then the move higher. And this is another example of the power of the volatility squeeze. So right here, if I knew nothing about this company and I was looking at pure price action and technicals, this was the price move. We had Beach Bum in the chat room likes to use pitchforks. So he put his pitchforks to try to identify resistance, and he actually nailed that 148 top the day of. Price came back again to retest the breakout, and it formed another continuation triangle. And then the Bollinger Band started to squeeze again. And it's funny how this works, but the Bollinger Band started to squeeze, volume started to pick up, the PPO started to give a signal, and then price came in, broke up again, another explosive move from a volatility squeeze. But I had a member message me in the chat room, and he's like, it's a microcap stock. It's funny. I found a news article from, I got to admit someone else. So I found a news article from a long time ago that says it's going to get listed on the NASDAQ. So because it's a penny stock, that must be why it went higher. Well, no, if you're looking, let's zoom in on the 2-hour chart. So you can see on this pullback, you can watch for accumulation, distribution. So on the retest of the breakout, the bears tried pushing it down at this 120 price label. As the sellers came in, someone was here to soak up that sell order, and price ramped higher. Again, there's this candle where somebody dumped it down to 122. I don't know what happened, whether it's a stop loss order, someone trying to get out of a position, a series of stop loss orders. But right when the stock looked like it was about to die and it came right down to retest the breakout of the volatility squeeze, you can see how buyers were here to soak up that liquidity. So this is watching price action. This isn't, I have a bias, I think it's going to go higher. This is, they tried pushing the stock down, and each time they failed, and buyers came in and pushed it up. And you can see by the tails of those hammers. And then after those two events, you can see why his volatility's been low all the way through. I mean, the volume's been low all the way through there, but price continued to consolidate. Then on the daily chart, we got our signal as volume increased. We got a continuation of the uptrend. So anybody can have a bias. I have biases, including myself, but I try to remove them. But while I was watching this stock, you can watch these areas and watch price action, what's happening. So you can take away the guessing and you can watch what's happening, not what you think is happening, or say, oh, that moved because of a news release. Well, no, it might have moved because of a news release, but this pattern, we watched it, volatility squeeze, breakout on an increase in volume, test of resistance, pull back, consolidate within a triangle, both tests of the lower line and the breakout. Someone tried pushing it down, buyers came in and bought it up. Price went on to continue to squeeze within a tight volatility squeeze. Then you got a breakout signal from a volatility squeeze above a flagging pattern or a continuation triangle above a major horizontal resistance line. So I think I'm out of time here, Greg. Do I have time to answer any questions, or I could keep rambling all day?
Dwight, your work's awesome. It's just awesome. So everybody, if you haven't seen Dwight, if you don't see his work every day, it would make it appear that he just selects these things, but he literally goes through hundreds of charts per day, posts a few on gregschnell.com under our daily setups. But his tools are really, really interesting. And again, for most of us that are working in the markets, if you want to trade a 5 minute chart, we don't usually get down to the 5 minute charts. We trade on the dailies. And I'm a weekly trader. I'm looking even longer time frames. I'm like Andrew. I like to go play golf. So the one thing that I would say that Dwight emphasizes over and over and over again is, he has a bias on this chart. It's to the upside, but he's still letting the chart help him with his bias. Like if it doesn't work out, he's out. And if his bias is correct, then he's in good shape. Well, obviously a lot of the medical names have moved up really nicely. So once again, Dwight, thank you for taking the time to put it all together. I love the way he works through and shows you kind of how the patterns are setting up, and then how they actually play out in real time. And he just gave you a couple of setups that he posted. His scanner's still lit. He's still got lots of good stuff showing up on his scanner, which would suggest the market's not ready to top out yet. The one thing that Dwight and I both find is I start to get worried because my data starts to lighten up. And then all of a sudden, Dwight finds his scanner goes quiet, like really quiet. And then he's like, I don't have anything to really post today. And so we see it. We see it start to evolve, and all of a sudden the good setups just dry up, and what we're looking for doesn't start to appear. So I would encourage you, if you haven't gone over to dwightsetyourstop.com to go check that out. Thanks again, Dwight. That was awesome.